Christian, do you expect we'll get a more dovish tilt than we certainly got with Powell at the Fed press conference last Wednesday?
Well, it always depends on the speaker. I think from the first two you mentioned, I would expect in particular Bullard to be relatively dovish. I mean, he surprised markets before, where he said he thought 25 basis points were appropriate when a lot of people thought he would be the one asking for 50 basis point cuts. But to be frank, overall, I wonder whether, so many speakers actually have become a problem for the Fed, because there are so many opinions voiced and markets started to price. When Clarita talked about insurance cuts first, markets react, and then Powell is in a position where he has to somehow clarify. And I think it makes it very difficult for him. And he came across more guarded last week. He did correct it a little bit afterwards. So I think these speakers that we are seeing will probably suggest that they can and they probably will cut more than what they just did last Wednesday.
Ben, will that have a significant effect on the market? We know that markets move on trade. They move, indeed, on Federal Reserve speak. We know that September is now already pricing in yet another cut. How dovish does the tone need to be to get any significant move on equities?
Well, I think it probably needs to be pretty dovish, I suspect, given the current environment that we're in. I think it's important, though, I think, to remember that the Fed does face a challenging situation, because the domestic economy in the United States remains relatively robust and domestic consumption is extremely strong. Against that backdrop, you've got a global economic environment which is clearly slowing for a wide number of reasons, which we've discussed. And I think trying to get that balance right for them is a difficult balance, given their domestic mandate, given the external environment. So I think one can understand why the messages coming out of the Fed are mixed. I think that said, I think they ultimately need to decide which way they're going to go in terms of whether they're going to make preemptive supportive actions or not.
But, Christian, is this because they don't know how to read the trade concerns, right? So if the trade worries were to be put to rest for good, what would that mean for Fed policy?
I think it would make them more confident about the economic situation domestically. I think Ben is completely right. We look at the picture on the labor market. It's a labor market that's producing less jobs than it did last year, but it has an unemployment rate of 3.7. We have healthy domestic demand. So this is typically a situation, and many critics of the Fed have pointed that out, where a Fed would not cut rates in this situation, and they have. And at the same time, they see this large uncertainty, the global, slump in manufacturing, and they now have to weigh these two forces. And on top of it, have, of course, an administration or more president who really wants a weaker dollar, he says. And putting all this together makes it extremely difficult for them.
Where do you see dollar from here until the end of the year, Ben?
Well, I think it's probably likely that we might start to see it weaken, I think. I think expectations so far have been that we see a more hawkish approach from the Fed. I guess that's been borne out so far. Again, I'm no great expert on currency dynamics, but I wouldn't, if I had to bet either way, I think relatively, we might start to see it underperform from here.